Hello everyone, it's Friday, May 22, and today we will analyze the charts for the euro and the British pound to identify potential market trends. As shown on the charts, the European currency faced pressure during the first half of the previous trading day. The British pound followed suit, losing value against the US dollar. Negative market sentiment was primarily triggered by preliminary data on manufacturing and services activity for May. The Eurozone manufacturing PMI dropped to 51.4 from 52.2 in April, signaling a slowdown, while the services PMI fell to 46.4 compared to 47.6 a month ago. These figures heightened investor concerns about the future of the European economy, discouraging euro buys despite a possible US-Iran peace agreement. The United States also reported similar data, with the manufacturing PMI increasing to 55.3 from 54.5. This allowed the dollar to extend gains, although the euro-dollar pair failed to breach last week's low, as the US services PMI slipped to 50.9, indicating a slowdown in activity among service providers. Later in the day, the euro and the pound sterling rallied on news that the US and Iran had reportedly reached a new peace deal, signaling progress. However, no agreements were reached regarding the nuclear program, and there were no detailed agreements concerning the Strait of Hormuz, indicating that key conflict points remain unresolved. As a result, the initial rally in risky assets has already begun to wane. Other markets reacted similarly, with oil prices tumbling before making a recovery. This suggests that the situation in the Middle East has not fundamentally changed, and markets are likely to continue monitoring negotiations which may stall over the weekend. Additionally, Israel Prime Minister Benjamin Netanyahu criticized the US President Donald Trump, advocating for a return to military action against Iran. He also threatened Israel strikes on Iranian nuclear facilities, which could lead to significant geopolitical escalation in the Middle East. Turning to today's fundamental, the macroeconomic calendar includes a batch of statistics from Germany featuring data on GDP growth, consumer sentiment, current conditions, and economic expectations. These reports could significantly influence the direction of the euro. Weak statistics might exert downward pressure on the European currency, resulting in further losses with a sideways range. Also on the agenda are a meeting of finance ministers and a Europe Group meeting. However, as usual, key attention will be directed toward developments in the Middle East. On the US side, traders should keep an eye on the Conference Board's leading economic index and the results of the University of Michigan surveys on inflation expectations and consumer sentiment. If these readings exceed consensus estimates, the greenback could strengthen. Additionally, Federal Reserve Governor Christopher Waller is scheduled to deliver a speech today, likely offering insights into the central bank's outlook. Now, let's move on to technical analysis. The 1-hour EUR USD chart indicates that the false breakout at 1.1585 and 1609 could present buying opportunities. Positive data from Germany could propel the euro to 1635. A break in consolidation above this level would push the pair up to 1659, potentially opening the way to 1678. At this level, I recommend considering short positions on the rebound, targeting an intraday correction of 15-20 pips. Short entries at 1635 and 1659 should be evaluated following a false breakout. In a bearish scenario, break and hold below 1609, the midpoint of the sideways range would provide an opportunity to add short positions If the price falls below 15.85, the euro could decline to 15.55 with the potential to reach 15.27. Much will depend on the situation in the Middle East. At these levels, traders are advised to go long on a rebound, targeting a move of 20-25 pips. Buy entries at 15.85 and 16.09 would be relevant only after a false breakout. Regarding the British pound, long positions could be considered on the false breakouts at 33.93 or 33.44. Buy entries on a rebound would be appropriate at 33.02, targeting a move of 25-30 pips. Given that today's macroeconomic calendar includes the significant reports from the UK, bears are likely to defend the 34.44 level, where short positions could be initiated on a false breakout, targeting 1.3393. If any positive developments arise regarding the US-Iran conflict, sterling could rise to 34.88, possibly extending the bullish trend that began on March 18 and may even reach 35.29. At this level, I would recommend considering short positions on the rebound, anticipating an intraday correction of 35-40 pips. Short entries at 34.88 and 34.44 should be evaluated only following a false breakout. Best of luck to everyone and have a great weekend.